Hey traders, welcome back to this week's weekly Forex forecast. Last week was a little bit of a volatile week. We started to see the VIX picking up, and in fact, we're going to look at the VIX a bit in today's video. And if we start with euro dollar, which we always do, you can see that yes, we kind of had this bounce and this weakening of the dollar last week, but generally speaking, we're still coming back down to this double top confirmation point. This is where there's most likely going to be a decision made as to whether the euro bounces and this turns into a big kind of sideways consolidation, or whether it breaks as this kind of double top and then you get the next leg down and the bigger move down. Either way, near term, you can see quite clearly in the daily chart, we have this kind of bear flag, pull back to the moving average, and we're sitting in this area. So as we go through the portfolio selection in today's video, you'll see both the euro and the US dollar are currencies I favor to the long side going into next week. But on balance, I prefer the dollar, and I would be looking for shorts in euro dollar given the opportunity next week. Okay, so if we drop down to the 4-hour time frame, you can see this kind of bear flag in action, and the major support level we just looked at in the daily is sitting at the second weekly lower bound. So is it going to get there next week? Probably not. It requires significant catalyst to get here. We do have CPI coming out next week on Thursday from the US. Maybe that could drive it all the way down here next week, but most likely, this could take a couple of weeks in order to get down here. So a couple of things I would be looking at in euro dollar next week is a trade into the downward sloping trend line. And what you can look for is notice how the moving average here acts as a kind of counter trend line. This kind of dynamic counter trend line. So you can look for it to push into the top of the channel and break. And as you get that breakdown, this is when you get the moving average follows it. And you get that bear flag set up. The profit taking zone next week is below the 1.1474. So most likely, depending on what happens with CPI on Thursday, we're going to see euro dollar coming down, taking out this low if it can break that counter trend move, if it can start to trade down below the 20-period moving average. So the second thing I'll be looking for next week as well is if we enter the sell zone, I'll be looking for a sell the rip opportunity. So I'm really looking for two things. I'm looking for the market to pull back in a market that I'm looking to be short. And either it's going to have a shallow pullback, in other words, it doesn't take out this upper bound and it starts to break down before it hits the upper bound, in which case you can look for that kind of intra-week bear flag, or it breaks through and it takes out the upper bound. Now, in this case, I would be looking for a short above the 1.16681. So we've got this high over here in the sell zone, and these are the exact setups that we're trading day in, day out with GMT members in real time. And there was a nice one from the weekly upper bound US dollar franc we took last week. And there was a number of actual setups last week that played out that I didn't take advantage of because of the volatility that was coming into markets. But there were quite a few last week in play. They were just a little bit more risky than normal because of what was happening and what is still happening in the VIX. So I would like to see a trade into this level, and I'd be looking for 1 or 2 days down, and that would probably translate into at least, even if this is going to continue higher, which I don't think it will, but that would at least translate into a retest on the overside of this trend line. So those are two things I'm going to be looking for in euro dollar next week. However, it's not the best market. I do think there are better markets, and we're going to be looking at those in today's video. Okay, so moving on to the portfolio selection, and sitting at the top this week is the US dollar as the #1 currency to the long side. So I primarily want to be looking at US dollar longs. You can see the euro, which we just looked at, is also down here, #3. So I do want to look for euro longs, and on balance between the US dollar and the euro, I would be looking for euro dollar to the downside or short opportunities where possible or given the chance. And the Australian dollar is sitting at #2. So, it's a little bit of a strange mix because normally an inflationary regime or positioning, you would have the US dollar and the Aussie outperforming, but the euro would be suffering. If we had a kind of risk off, kind of fear coming into the markets, the Australian dollar would be down, even though the US dollar and the euro could be up. And if we had a kind of, stagflationary outlook or even a disinflationary outlook rather, you would actually see, the euro and maybe even the pound outperforming. And, if we've got disinflation, the Aussie would underperform, and even the dollar, because the dollar goes up when you have inflation, you have rates, etc. In fact, the dollar goes up on the dollar smile. So it looks like this with the dollar. So essentially the dollar goes up if data is really bad, and the dollar goes up if data is really good. So deflation, the dollar goes up. inflation or strong inflation, the dollar goes up. Disinflation or kind of at target inflation, the dollar tends to do nothing or go down. So going into next week is a little bit of a strange mix that we have up here, and it doesn't make the regime outlook particularly clear, because if it was inflationary, we would be expecting, the Canadian dollar to do better and maybe even the New Zealand dollar, but the New Zealand dollar is the top short. And you would also expect the yen to underperform, but if that was risk off, you'd expect the Aussie to go down. So it's a mixed bag this week, so I'm not going to overthink it. I'm just going to trade as the quantitative data is laid out. So the second thing to the short side we're going to be looking at is the Japanese yen. And also we're going to be looking at the pound to the downside as well. So with that said, what we're going to be looking at is New Zealand dollar to the downside, US dollar yen to the upside, pound dollar to the downside. We're also going to be looking at Aussie New Zealand to the upside, Aussie yen to the upside, pound Aussie to the downside. And we're also going to be looking at Euro pound to the upside, Euro yen to the upside, and Euro New Zealand to the upside. Okay, so kicking off the watch list as always with crude oil. Now crude oil is on balance a short, and I've zoomed out here to begin with so you can see this kind of down channel. We've got 2 points here, 2 points here. So if I just zoom in, you can see on the 4-hour chart, a really nice area of confluence right here. So what this means is if we can push higher this week, ideally what I'd like to see is crude oil taking out the upper bound. This is where we enter the sell zone between these two levels. The sell zone is where we turn overbought during the week. So as we trade into the sell zone, we would also be trading into the top of the channel here. And this would set up a great opportunity to look for a 1 or 2 day reversal to the downside. That's what I'm going to be looking at next week if we can get there in real time with GMT members. The second thing, because that's the deeper pullback, so a more shallow pullback, deeper pullback. These are really the two things that we're looking for, or that you can look at, at the start of a week in any given week. So if we start to pull back towards the top of the range or the top of the channel, the downward sloping channel, and we start to break down, so we could hit this high, for example. This could turn into an A, B, and then a C. We hit this high, we fail to take out the top of the channel, and we just start reversing back down below the trend line. Just like this. We start to break down. Then we have a consolidation, then we sell off, then we have a consolidation, then we sell off. So if we break down, you'll see the moving average turn. And this is where you can start to look for that bear flag setup down to the profit taking zone next week, which is at the 56.45. And, there's a decent chance we could take out the prior low, especially if we start to break down here. I mean, it might just pull back in this area and break down, right? And the moving average follows it here. Then we have a much better chance of actually taking out the prior low, as opposed to if we come, very close to the top of the channel. So kind of a hard target down here would be the prior low. Beyond that would be the bottom of the channel, but anywhere below the 56.41 next week is a good place to look for profit taking any intra-week shorts in crude oil. But I can only be short crude oil or do nothing next week. I cannot buy crude oil next week. Okay, so just quickly before we look at further markets, I want to have a quick look at the VIX. So all I simply have here is a 20-period moving average and a 10-period moving average, so a kind of fast and slow trend line. And what we can see here is that volatility last week started to pick up. I mean, if you look at this on a 4-hour time horizon, we are starting to trend to the upside. And this is where we started to see volatility take off. Now, it kind of got crushed into the close. However, if you look at the weekly, you can see that we still had a green candle. In this case, it's white, but it's actually a green candle. So despite the kind of crush at the end of the week, we still finished the week with a kind of bullish close. In other words, we closed higher than we opened. So, I question, are we going to get a gap up over the weekend? Are we going to see a re-acceleration of the VIX, coming into Monday? If we do, just bear that in mind, because if you're looking at being short the yen, which we're going to be looking at in today's video, or long the Aussie dollar, those two currencies you might want to just be cautious about if you start to see volatility really accelerating to the upside. So just bear that in mind with Aussie dollar longs and Japanese yen shorts. If you see the VIX beginning to take off to the upside, you really just want to, be cautious being long the Aussie or short the yen. But because it got crushed at the end of last week, I'd rather just see how it, opens. And if we get, the market continuing to crush, then everything we're looking at in today's video, I'll be looking at just as we're going to go through. And if we start to see the VIX accelerating, I might just hold off on shorting the yen or being long the Aussie dollar and focus on some of those other more risk off setups like Euro New Zealand to the upside, etc., etc. Now, if we just have a look at the S&P 500 as well, because again, we're putting all of this into context, there's nothing really here bearish in the S&P 500. We're kind of moving up. Yes, we're lacking momentum a little bit. Here we're holding the 20, here we're kind of breaking down. But the main kind of issue with the S&P 500 is you can see on a 3-month or quarterly time horizon, we're really extended. And so I question, if we are going to get a volatility spike, is that going to bring this down over the course of, a quarter or the back end of the year, or maybe the first quarter of next year? But just in a way, very much like over here, it just kind of pulls back to the 10 moving average and then continues. So we're not talking about a massive kind of deflationary crash, more a kind of, sharp correction just to wash out the kind of extremes that we're seeing in the S&P 500. That's what looks like is most likely going to take place. Just the question is when. It doesn't have to be next week. It doesn't even have to be this month. It could actually just start in Q1 of next year. But if we do start to see the VIX reaccelerating, just bear this in mind. It looks like we could be seeing this because we're a bit overextended to the upside in US equities. Okay, so kicking off with the US dollar pair, started with New Zealand dollar. You can see this is also channeling to the downside, and it is a short or do nothing going into next week. What I'd like to see is, if we zoom in a little bit, I'd like to see this breaking back above its moving average. So the moving average follows it, because then you're in a correction. Doesn't have to necessarily trade up above it for this long, but I'd like to see it pushing above it, even if it's just very briefly. Sometimes it can kind of do this for a few days, sometimes you can do it for a week or so, sometimes it just does it for a day or two. So if we start to break up above here, I will be looking for this to pull back into the sell zone between these two levels, which is above the 0.56943. And we also have the top of the channel over here as well. So I would be looking ideally for a test of the top of the channel. This is where I'd be looking for a 1 or 2 day reversal in New Zealand dollar. If we start to break up and we have a fast market, a strong market to the downside, so we fail to take out or we fail to turn overbought during the week, you can look for that breakdown. So you have your counter trend move, then a breakdown, and then you get your bear flag set up into the lower bound at the 0.55625. Next is US dollar yen. I can either be a buyer of this market or do nothing next week. I cannot sell this market. You can see we're already down below the moving average, and I'd like to see this continue. And ideally come all the way down and test. We have a really nice prior low in an area where we start to turn oversold during the week below the 151.61. So this is a great setup going into next week. I'm going to be looking for a failed breakout down below this low. I'm going to be looking for a 1 or 2 day bounce to the upside. And the other thing you can look for is, again, if you have a strong market and instead of turning oversold during the week where you get your buy the dip opportunity, you start to break out of this kind of counter trend move. And of course, the moving average will follow. And this is where you get your bull flag set up into the upper bound and the profit taking zone next week at 155.13. Next is pound dollar. I can either be short or do nothing. And you can see we're already above the moving average and we're starting to counter trend. So I'd like to see this continue. I'd like to see the moving average continue to push up. And if we're holding the moving average all the way up, I'm going to be looking for a test of the upper bound at the 1.32908. This is where we enter the sell zone, and it's also a stair step of this breakout low. So broken support, turning resistance, this is going to be a really nice place to start to look for a rejection and a 1 or 2 day reversal to the downside. And if you get a fast market where we start to make our way towards the upper bound, and instead of testing it, it breaks back down below the moving average. And this is where I'm saying over here, you can get this for multiple days or even a couple of weeks, and sometimes you can get it just for even intraday. So if that's the case, you can look for the moving average to follow it. You've got that counter trend breakout. You can start to look for your bear flag setup into the profit taking zone at 1.3038, but I would aim for this prior low because it sits in the profit taking zone, and there's a good chance we continue to make new lows in this market. So personally speaking, I think a very good technical target is the prior low next week in pound dollar for any intra-week shorts. Okay, so moving on to the Aussie pairs, starting with Aussie yen. Now, I'm looking to primarily be a buyer. If you start to see the VIX really exploding, then you might want to filter longs in Aussie yen, focus on some of those risk-off setups. New Zealand dollar short is a good one, pound dollar short. Again, US dollar long, you might leave that because you'll be shorting the yen, but you could look at the pound versus the dollar to the downside, New Zealand dollar to the downside. But generally speaking, as long as the VIX doesn't start to explode to the upside, I'm going to be looking for buying opportunities Aussie yen. We're already down below the moving average, so I'm looking for this to continue down. And there are two nice support levels here in the 4-hour chart, which kind of straddle the buy zone next week. So I'd like to see it come down to the 98.19 to the 97.91. And this is the area, once we turn oversold during the week, if we can do this, I'm going to be looking for that 1 or 2 day bounce to the upside. If we get a stronger market, and instead of taking out the lower bound, we get the break back above the moving average, this kind of dynamic counter trend move we're getting here, this counter trend line, I'd like to see any kind of bull flag set up into the profit taking zone at the 100.90. And again, anytime you have a prior high sitting just inside the profit taking zone, you know, you can use that prior high as a good hard target for any profit taking in any intraweek longs in Aussie yen next week. Next is Aussie New Zealand. I can either be long or do nothing. I cannot sell this market next week. It looked like we may have even had a bit of a blow off top at the end there, only temporarily, but still, you know, we didn't come down very hard. So maybe this is just a breakout of this kind of grinding up move. So what I'd like to see is I'd like to ideally see this come back and, you know, have a little bit of a correction, at least into the moving average. But the primary thing I would look for next week is a bigger pullback. And what I like about this is we would be stair stepping into the prior high. That's the breakout point, comes back, stair steps and turns oversold during the week at the same time. That's where I'd be looking for a nice bounce and a rejection to the upside for 1 or 2 days. If we do start to make our way down to there, but instead of taking it out, we get a reacceleration of the trend, a counter trend break, that's when you can start to look for those bull flag setups. And the profit taking target next week to the upside is the 1.1614. Next is pound Aussie. I can either be short or do nothing. I cannot buy this market next week. And you can see in pound Aussie, we did have that kind of push higher. We started to make our way to the upside last week. But overall, really, this is still a fairly weak market. At best, it's kind of ranging. You know, it's starting to make its way towards the top of a range again. So I would like to look for short opportunities. And ideally, I'd like to see us break above the 2.0460. This is where we turn overbought during the week and where the odds of a pause or a reversal lower start to increase. And we do also have, you know, a key area of support, potentially turning resistance here. Key area of support, potentially turning resistance here. However, this is the area of resistance I like the best. Why? Because this was a place in the past that price came into and sold off. And that's what I'll be looking again this week for. So yes, you know, broken support can act as resistance. But in my personal opinion, prior resistance, which actually drove price lower rather than prior resistance, which drove price higher, is usually a better form of resistance if you're looking to short something from a key area of resistance. So that's the area I'm going to be looking for. I'm going to be looking for a pullback and a failed breakout above the 2.05140. And again, this is exactly what we're looking at in real time throughout the week. So this is not theory. You know, this is the exact setup we'll be pulling the trigger on if we get this. And the other thing is, again, that kind of fast market. You know, if we start to pull back and, you know, maybe this starts to peter out, maybe we bounce at this high and then we reverse, that's when you can look for your moving average to follow it and you get your bear flag set up into the profit taking zone at 2.00739. You know, maybe this is a bit of a stretch next week, maybe, but this low over here, you know, would be a good profit taking target in the buy zone next week, or the profit taking zone in this case. Okay, so moving on to the euro pairs, starting with Euro New Zealand. Now, if the VIX does start to take off, Euro New Zealand should go to the upside because this is a risk off play. If you're buying Euro New Zealand, it tends to go up if you get fear coming into the markets. So what I'd like to see is, because we're at a high here, this really needs to pause and correct first. I'd like to see this come down, ideally. Now, I'm not sure if it's going to come all the way back down to the prior low. You know, I've seen these markets do this multiple times, so it's definitely not off the cards. Even though this looks like this is so strong, how could this come all the way back down? But if it does correct more deeply next week and we take out the 2.0264, which sits in the top half of the buy zone, this is going to be a great place, and I'm going to personally be looking for a 1 or 2 day opportunity to the upside, so a bounce or rejection from this level and a failed breakout to the downside from below here. And if we do hold up in this market, again, you know, at least you'd like to see this pull back to the moving average and preferably below it before starting to look for your counter trend line break. Price breaks up, the moving average follows it, profit taking zone for any bull flag setups next week is the 2.07536. Next is Euro Yen. Now again, if you start to see volatility exploding, maybe just sidestep long opportunities in Euro Yen. If the VIX kind of gets crushed, you can look for Euro Yen to the upside. If the VIX starts to take off, focus on Euro New Zealand longs, which should benefit from a rally in the VIX or fear coming into the markets. And focus on Euro Pound, which should also go to the upside, which we're going to look at next. So what I'd like to see in Euro Yen is ideally another correction down into this prior low. This prior low sits right at the buy zone heading into next week. This is where I'd be looking for a potential long opportunity. And again, in this case, you can see this would actually be a head and shoulders. Now, if we're not getting fear coming into equities, this head and shoulders, should be a false breakout. And as those shorts get liquidated, that's where you get your 1 to 2 days worth of opportunity to the upside. If the VIX really starts to do this, then this could actually break, with momentum. I mean, that could actually hold. If you start to see equities tanking, the VIX pushing higher, then again, this is why I'm saying sidestep this. But assuming the VIX continues to get crushed, which is what started to happen at the end of Friday, then I would be looking for a failed head and shoulders break and an opportunity to the upside. And if we're starting to make our way down, and perhaps, maybe we get stuck at this low or whatever, and we re-break with momentum, look for the moving average to follow it, and you can look for that bull flag set up into the profit taking zone at 179.12. And the final euro pair before we move on to gold and silver is Euro Pound. Now, Euro Pound should also go to the upside if you start to see fear coming into the market. So again, I would be interested in buying Euro Pound if we do start to see the VIX breaking higher once again. But what I'd like to see next week is, because we kind of failed at this high and we're coming down now below the moving average, I'd like to see this come down next week and take out this low, which is right at these prior highs here, and also sits right at the start of the buy zone next week. This is going to be a great place next week if we can come down to look reactively for a rejection and a bounce for 1 or 2 days. That's what I'm going to be looking for in real time with members next week. If we start to make our way down, and again, maybe this turns into a kind of more of a rectangle pattern, we bounce at the lows and we re-break the moving average, then you can look for the moving average to follow it, and that gives you your bull flag setup into the profit taking zone next week at 0.88441. But I can only be long this market next week or do nothing. I cannot sell this market next week. Okay, so wrapping up the video with gold and silver. Now, gold and silver are going into tight consolidations, and with a bullish bias in the dollar, I do allow myself to take short positions in gold and silver for a few days if the opportunity arises. So I would like to trade both gold and silver either from the buy zone or the sell zone. Not really interested in trading them between, intra-week, because the market's just too tight. It's coiling. So I'd like to see the move coming first. If we can push down into the lower bound and also take out the prior low over here, this is an area I would be looking for a 1 or 2 day bounce to the upside. Now, you just want to make sure with a bullish dollar that you don't just go straight through this level like a hot knife through butter. You want to see it kind of come down and then start to lack momentum, and then you can look for your reversal patterns before you get that kind of liquidation. But that's what I'm going to be looking for tentatively next week. I don't think gold and silver are amazing opportunities anymore. I think the other markets that we've already looked at are actually better. But if we trade into that level, I will reactively be looking for a potential bounce. And to the short side in gold, if we push, because we're kind of consolidating, we're in this kind of ranging environment, if we push into the upper bound at the 4096.66, I will consider potential shorts from this high over here. Again, if you don't want to get involved in shorting this because you think it could rip higher, we still haven't washed out all this volatility, totally understandable. I'd rather buy gold and silver than sell them. But I will be personally just looking to see how price reacts over here. And if we get into this area and the dollar has kind of pulled back and it looks like the dollar's about to snap higher, then I would potentially take that short for only 1 or 2 days to the downside next week back inside the range in gold. Ideally, out of the two, I'd prefer this kind of range low bounce. And finally, we have silver. Now, I wouldn't really short silver, and there's no nice high in silver. There's nothing but air between here. We do have the prior low, but there's nothing but air between here and this high up here. So, at risk of this kind of shooting all the way through and kind of taking out this kind of gap, it's not a gap, but it's kind of an air pocket, I would prefer only to look for longs in silver next week at this level here specifically. So I'd be looking for silver to come down, turn over sold during the week, and I'll be looking for that bounce at the double bottom low for a 1 or 2 day liquidation back inside the range. As it currently stands, because of this ranging environment, that's the only setup I'm really interested in next week in silver. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.